Well, welcome back to Fiscal Notes, a channel, a leading technology provider of global policy and market intelligence. And joining to discuss the recent earnings, new products, we're going to talk a little bit about the debt and more. Josh Resnick, the CEO, joining us first and foremost. Welcome, sir.
Kyle, thanks a lot for having me today.
Always a pleasure to get you back on. So, yeah, your earnings were pretty intriguing. You guys are introducing a lot of new products. There's a lot of questions around where the growth is coming from. Do you want to just give us some insight from that earnings? What's going on kind of under the hood?
Sure. And again, thanks for having me, Kyle. Appreciate it. We did announce earnings recently, just a few weeks ago. We had a good Q1, beat expectations for revenue and adjusted EBITDA. We're continuing to execute on the plan that we have explained to everyone, where there's a lot of investment that we're making in product as the next step towards our future growth. So, as a reminder, we have thousands of clients today who are paying us for our comprehensive and critical policy data and information. We collect this important policy data from more than 100 countries globally. We go very deep locally in the US, more than 16,000 districts across the US. So it's really this unmatched, unparalleled collection of public data sets. We combine it with our own proprietary analysis and information, which literally nobody else has. And we provide our customers with really important insights that are very, very impactful to their business. And so all this is a really solid foundation for us to start from. The challenge that we've had from a growth perspective has been product, where a lot of these data sets are siloed into separate legacy products. So getting, federal data from one product, local from a different product, that creates a lot of friction in the buying process. It creates friction in engagement, and it makes it difficult to drive cross-sell and upsell. So it really hurts us with all aspects of the buying and growth process. To address that, we launched our new flagship product, FiscalNote, in January of this year, and we're seeing really excellent metrics there. So we're excited about what that's going to do for our future growth.
Yeah, definitely appreciate the insight there as well. I do want to talk a little bit more in depthly. I mean, you have the tariff tracker. Do you want to talk about how you're helping clients and some of these products specifically?
Sure, absolutely. So as I said, PolicyNote is now this foundation for future growth. PolicyNote will be this collection of all of our data and information in one place. That's going to be incredibly powerful for driving business going forward. So it'll be powerful from a new logo perspective, where it'll make the sales process work better. It will improve our deal velocity metrics, and it will improve ACVs as we're better able to bundle more and more of these data sets into a single sale by virtue of having them in the same platform. It will also help drive engagement by making it easier for customers to use the product. It's a very AI forward experience, so very natural language type of experience. And we're already seeing strong engagement metrics. And then it will enable upsell, cross sell to drive that expansion revenue as we're able to offer more information and more features to the users as part of their experience. So, one example of that. So, we launched PolicyNote in January of this year. And we're really excited about not just that launch and not just the product, but the continued execution and innovation that we've seen since. So in Q1 alone, post launch of PolicyNote, we added 15 major new features and enhancements to the product in a very short amount of time. So the pace of our innovation has improved. And the pace of our execution overall. And one good example of that is the tariff tracker that we launched actually in April. So April 2nd, President Trump announced sweeping tariffs in what he called Liberation Day that really created some challenges for organizations around the world as they had to figure out then how are we going to navigate this new environment with all these tariffs and what will that mean? Within 2 weeks of that day, so by April 16th, we had in PolicyNote a brand new tariff tracker. So not just kind of a slideware, not just in testing, but actually launched in production in the product within 2 weeks of the announcement of those tariffs. So really rapid innovation. But what's also really interesting is we're able to tie that back to commercial execution as well. So our teams were out making calls on that day, and on that day alone, set almost 200 new meetings and essentially built about $1 million in new pipeline just based on the launch of that one new feature on that one day. So we're really excited with the new product, with the pace of innovation, and with our ability to take that innovation and turn it into tangible commercial results.
Yeah, it's incredibly insightful, and I appreciate that. And maybe just anecdotally, when it comes to the balance sheet side of things, there were some questions around paying down debt. Do you want to just give a little bit of insight there?
Yeah, sure. We've been managing our debt in a really strong way. We've paid down our senior term loan by about 60% in about the past 18 months. So we've been very focused in terms of getting our debt under control and improving free cash flow. So our cash interest payments are now down from 5 million per quarter to about 2 million per quarter. So really substantial improvements there. Um, and you're seeing strong improvements in free cash flow overall. So looking on a trailing 12-month basis, if you look at the period ending March 31, 2025 versus the same period 2023, so 2 years, we've improved free cash flow by about $70 million in just that amount of time. And it's come through this improvement in the operational improvements that we talked about, in as well as managing the debt well and reducing our cash interest expense. We continue to have that as a focus going forward in terms of thinking about capital structure and debt stack and how we manage that going forward. But the same type of discipline that we have when it comes to our operations and where we've shown the ability to improve excellence in our operations, we're applying that same discipline with our debt as well.
No, that's awesome, and I'll pass it off to the viewers as always. We'd love to know what you think about all of us in that comment section below. And consider subscribing as news catalysts like this hit the wire. We're going to bring it to you here. But on that, we look forward to catching you in the next one.
Thanks, Kyle.